So those are, I guess, two most recent ones.
Hi, I'm Matt Ahern, a managing director at Moelis and Company, another investment bank, a global investment bank within our telecom group. A couple transactions that we've worked on. We advised AboveNet on their sale to Zayo a couple years ago, advised Mobility on their sale of certain assets to SBA Communications on the small cell side and macro cell site. And then most recently advised Shentel on buying Intellos and swapping assets with Sprint at the same time. That was a couple weeks ago.
I'm Brian Clark with MC Partners. We are a Boston-based private equity fund focused on the middle market, pretty much exclusively in telecom and IT services. Been very active in emerging telecom and fiber going back a long time, including some notable recent deals such as Light Tower back in 2007, as well as Zayo, where we were lead investors in both of those. And then, as you just heard from Jason, we just announced a new deal actually today in the Midwest for a BTOP, formerly BTOP funded fiber network. So, very interested in all things infrastructure, whether it's fiber, data center hosting, or on the tower and small cell side.
I'm Rich Ruben. I'm Vice Chairman of PEG Bandwidth. I represent the operational side of this as well as the investment side. Through my career, I've been on both sides. Our business is funded by Associated Partners. I was instrumental in bringing the deal to Associated, so that was a fun deal. We've done a couple acquisitions through then, and if I go back to my earlier days, I had the M&A responsibility for Bell Atlantic Mobile as we were turning that into Verizon Wireless.
Chris Bloise, I'm a partner at a private equity firm based in New York called Court Square Capital. We manage about $6 billion in assets and capital. Today, we've got a long history, generally pretty good, in investing in kind of communications infrastructure. Our first fiber deal, I think, was done in 1996. That predates me, but more recently, we made an investment last year in a rural Tier 3 microwave and fiber business called Cantera, ultra broadband, and earlier this year, we sold another metro fiber provider, Fibertech, to Light Tower.
Sounds good. So let's kick things off. Rich, discuss a little as your role of Vice Chairman of PEG. In your role as an operator, can you maybe talk about the current demand environment for fiber and fiber-based backhaul?
Sure. Tremendous demand for fiber. I mean, everything's running over fiber. Fiber continues to be an exploding market. I think we've heard that consistently through the sessions here. From a standpoint of backhaul, most of the carriers have completed the initial pieces of their backhaul builds. Most of them are 90 to 95% done in their existing markets and existing networks, having fiber-based backhaul, bringing their content from their cell sites back to the switch. Some of them have now started to focus on transitioning to dark fiber. Others are some of the same ones are looking at distributing their RAN in a centralized or cloud-based RAN environment. So that's creating some great opportunities. Small cell is also a great opportunity that is still in the early innings of where it's going. So great opportunities there. And we also see 10 to 15% growth in macro cells, as well as some significant bandwidth increases. So there's an awful lot that still needs to be done on the backhaul side, but especially on the base fiber side, we're seeing everything needs to get back to fiber. So we're still seeing explosive demand in the fiber side.
Yeah. So, Brian, you and MC were extremely early into this space and have done a number of deals over the years. I mean, you had things predating ICG, but ICG, one of them, Zayo, Light Tower, et cetera. Can you maybe discuss your initial thesis on the space and what drove your initial plays that you made over the years?
Yeah. Well, I mean, you go back even further when all these networks were getting built, 99, 2000. It was very much kind of a build it and they will come approach. didn't work out so well, too much supply on the market. So when we got back in the market, 2004 was ICG, which was kind of like a fiber CLEC. It was very much kind of a restructuring opportunity, where they were at kind of asset-light markets and some, really good fiber markets, actually 2 out of probably, 20 that they were in. And, that was in Ohio and Colorado. And what we saw, so that was 04, sold it in 06, coming out of that, was you really did see the demand trends around broadband, and not just from wireless. Wireless was a big part of it, but, really across all verticals, healthcare, education. So we saw something we really liked there, and it was encouraging. So, in 07, we sold that, and ICG, the management team there, was Dan Caruso and most of his team. And so we sat down with Dan and said, what's the right way to play this market now? And, there was recognition that, this was actually still pretty fragmented back then, and there was, this tremendous roll-up opportunity. So, that's how Zayo got started back in 07, 35, acquisitions later, you got a, 750 million, 800 million EBITDA company. And, the thesis around Light Tower was similar in that you wanted to take advantage of these broadband trends. And, for us, bringing institutional capital in can, allow you to do some things differently. And so Light Tower actually had this great initial network. And, I think one of the things we may get into later is what makes a fiber network interesting is that, had very unique routes that were strung along the utility rights of way, and also great density in a very localized area in Boston and New York. But what we really thought we could bring to the table is the investment that required. It was owned by the national grid originally, and it was really underinvested. And by being able to provide the capital to, pursue a much more aggressive growth strategy, we thought that was a thesis that made sense.
So Chris, on your end of things, you and Court Square made your investment in Fibertech in 2010 and came in at a pretty high multiple compared to where the space was trading at the time. So people looked at it a little in shock outside the space that didn't know the space. So I'm thinking about your initial thesis there and that play, wondering what drove the initial thinking, and is there still room for plays like that today in your mind?
So as an aside, before I answer the question, I had an article right after we announced, I want to say it was the Daily Deal. If people remember, in 2010, there were actually a series of deals, fiber-based deals that were announced, and I think Fibertech and our deal was the last one at the time. There's KDL was acquired during that time period, amongst a couple others who I'm forgetting. Anyway, the Daily Deal article more or less called us out and kind of called us the village idiot. So I had that hanging on my wall for several years, just for reminding myself in my own humble way, like, the path from brilliant to village idiot is a very, very short one. But to answer your question, it's not, I would say our thesis is very similar to what Brian said broadly about the broadband space. What drove us into it really was, our experience in Intellos, back when Intellos and Lumos were one company. When we were exiting that investment, the most attractive growth area and the best return on capital was the metro fiber business that they had. They had this really interesting ring in the Shenandoah Valley, and we didn't put a ton of money backing it, but I remember being amazed at kind of contractual revenue, high unlevered ROIs, multi-year contracts, and just a lot of good growth off of it. I remember thinking we should try and find businesses that take advantage of that, and this is the time where all fiber was kind of painted with this brush, and we started to use this term that we picked up on was metro fiber. And so we were really interested in metro fiber, largely because our work told us it was underpenetrated vis-a-vis other areas, and that you can get unique routes. And if you can find businesses focused in areas that are underpenetrated and with unique routes, that would be a pretty interesting play. We were the losing bid on some of those other investments in 2010, and luckily enough, I guess we won the Fibertech auction at the time, and it turned out pretty well for us. But our thesis was very straightforward. It was trying to play tier 2 markets, which is where they specialized in because the competition tends to be a little less. It was playing purely on the metro side. They were excellent at building in metro markets. They were all organically grown. They had done a fantastic job selling both to carriers and to enterprises. Generally at the time period, we were seeing companies who were good at one versus the other. So It was just a really interesting set of assets that we were trying to play because it had just great tailwinds behind it. You know, whether you're a good company or a great company, you know, it really helps when the market's just growing exponentially. And as we saw for years, dating from our first investment in '96 all the way, you know, to the mid-2000s with Intellos, the demands on the network were growing 30 to 40% a year. And if that's the tailwind that you're riding, and that's what we're sort of all betting on, that's a pretty good tailwind. So that's really what our investments have been focused on.
Yeah. So, Rich, on your end of things, when the founders of PEG came to you and the associated team, what motivated the group that you were with to write that initial check? And obviously they were, you know, a new entrant, a completely greenfield new entrant into the space, which is a lot different than an existing asset.
So the concept was all around backhaul and all around the need for wireless carriers to rebuild their traditional copper networks and replace them with fiber-based Ethernet networks. So what we were excited about was, you know, that aspect and using capital to be able to build fiber for a very large anchor tenant that would need that network for a long time. We believed then and believe now that fiber is going to be the medium that you're going to use for backhaul for a very long period of time. They're great customers that are going to always pay their bills. It's an infrastructure asset that you really need, and you get a long-term contract with a AAA rated credit. The other side of that is they're very demanding as a customer. We also liked the aspect that we were going to be focused in very rural markets where there wasn't a lot of fiber. So our thesis from the very beginning was to really provide a niche where a cable company or a large telco or a larger fiber player really couldn't perform and where there wasn't a lot of fiber. And we continue to go down that road. We continue to believe that there's a lot of areas where there isn't enough fiber. We have some areas we talked about in the early days of Build It and They Will Come, where markets got overbuilt, but the rural markets got ignored. So there's still a great opportunity and a great need for more fiber in those areas. And we look at it and say, okay, now we've got a great fiber network that can be used for a lot of different customers.
Yeah. Sounds good. So, Matt and Jason, you guys have done a multitude of deals in this space, and obviously the interest has gotten to colossally high levels compared to where it was 7 years ago. Maybe if you want to take us through how that, you know, why that's changed and how it's changed, and what was, you know, the point at which you started seeing, you know, that interest really begin to really shine recently.
I can go ahead and start. You know, to reiterate, I think what Rich and Chris said, I think part of it is, you know, it's a combination really of infrastructure with growth. You know, there's the contractual nature of the business that's attractive to investors. You have long-term contracts with strong credits behind it, as well as the growth aspect of it that we all see as we go to the convention floor and look around, just the various technologies and how they're evolving. All of those technologies at some point will be traveling over fiber networks, and the need for that bandwidth to support the exponential growth in data is one of the fundamentals that's driving the sector. And I think it's been the combination of those two things. And as we've looked at M&A activity in particular, Brian touched on it as well, we've gone through a very heavy phase of consolidation. There's still more to come, certainly, in the fiber sector, but we've seen massive amount of consolidation. Zayo doing a considerable amount of it with over, I think, 34 transactions or right around there over the last 7 years. So a lot of interest in investors from the equity side, driven by the fundamentals as well as the opportunity to consolidate.
Yeah. So Jason, I guess we'll change it a little bit here, but you've gotten involved recently in 2 deals that are not your traditional pure metro fiber, you know, traditional assets. So you mentioned the B-Top deal you guys just announced, and also the Bayring Oxford deal, which Oxford having an ILEC piece of the asset. Maybe you could talk about, you know, how those assets have played and how you've seen investor interest around those sort of different, less pure metro fiber assets recently.
Yeah, sure. So the Oxford deal had, Oxford's was an ILEC, still is, but has transformed itself to an ILEC, more fiber play, more data center play. When we started working with them, they were trying to figure out what to do. They had built some of their fiber network, from the northern Maine border down largely to the southern Maine border with a connection into Boston. But they had this ILEC cash flow, and they also had just gotten into this data center, and they're faced the fundamental question of, okay, now what, and how do we fund this? Yeah. And the ILEC was what the ILEC was, and it was a difficult. We went out to a lot of different parties, a lot of different investors with this opportunity. And the ILEC scared a lot of people off, a lot of investors off. What does it mean, what happens? And kind of our positioning was, look, it is what it is. We all know what ILEC cash flows are. There's, certain changes that are going on. Those are fairly identifiable. You may not, lots of parties wanted to just sell off the ILEC and see if they could get some cash from that. But to be honest, the ILEC M&A market isn't that hot. So if you can just enjoy those cash flows and leverage them up, which is what we're able to do, and then use that ILEC cash flow to further support the growth of the network, whether that be through leverage or just from enjoying that cash flow, that was sort of how we positioned it and what attracted the investor interest that we had. You had a fairly solid ILEC position with fairly solid ILEC cash flows, in very rural Maine, so there wasn't as big of a threat of, oh my gosh, you're going to have, all the major wireless carriers are going to be there offering LTE, and that's just going to kill the entire ILEC play. So it was a fairly protected ILEC. The decline in lines wasn't that significant. There wasn't that much competition. So enjoy those cash flows, but use that then to grow the fiber business. And the fiber network they had was all business based. They weren't doing any residential, all business. They had fiber to the tower opportunity as part of the revenue, as well as thousands of businesses that were on that as well, and so that was an interesting play, and I think it was also an interesting play from what they just did, which was the northern New England market. Let's call it north of Boston. There's lots of different fiber plays that are up there, whether they're BTOP funded or called private party owned. And so the next part of the play was, okay, and you could then use again this base to further consolidate the region, and so the move they made was into Bayring, and so it wasn't the ILEC piece was a piece that you could look on negatively, but I think the group that ultimately went into it and did the deal looked on it very positively, as these are cash flows that we actually can get some leverage on and use that to further grow the growth area of the business, which is the fiber part. Yeah. The BTOP deal, Brian can touch on this too if he wants, but that's a really interesting one, and I think one that there's lots of that BTOP money went out, call it in that 2010 timeframe plus or minus. And some of those are great networks, and some of those are kind of networks that were built in areas where there may not be that much growth. This one in particular was built in the Cleveland metro area and kind of northeast Ohio. If Brian wants to speak more to what they found attractive about the investment thesis, but really what sold that was you've got a metro fiber ring, and different than what you saw kind of driving interest from 7 years ago. I remember when we advised on the light tower deal and helped pull all that together. I remember when we went out with that, the thesis was really just about fiber and the fiber ring, et cetera. And there wasn't much talk in that deal at that time, obviously, about how data traffic is being driven by the cloud or by fiber to the tower or by, DAS or anything like that. And this, I think you have a lot of, now what attracted MC and other parties to this transaction, an opportunity were all those growth areas. So you're in a metro area, you've got lots of opportunities for growth, you've got data center opportunities, et cetera, and everything's going to be running over fiber. And so the positioning on that, was more about that growth, but you had to go through the BTOP aspect of it, and understanding the BTOP aspect of it. And that was fairly complicated, but the assets are so good that, parties were willing to work through that.
Yeah, I mean, clearly, for us, the value, certainly there was a lot of value in the assets and the $80 million that had went into building this fiber network, and that was largely in areas that were less competitive, where you didn't have 4 or 5 other fiber provider options. And, in those areas, in Cleveland, downtown Cleveland, obviously, we weren't interested in investing in a network that was just in the metro area. But where we saw opportunities was connecting some of these outlying towns in Northeast Ohio, with that metro area. Initially, this had been built with a lot of healthcare institutions and hospitals in mind, but we knew, looking, some very detailed analysis of the near net capability of the network. How much is it going to cost you? And I talked earlier about density of networks. How much is it going to cost you to connect a building that's half a mile away, a mile away? And you have that significant advantage over someone else that might be going into the market that maybe just runs on a highway going through the city or something along those lines. So we saw significant opportunity in these underpenetrated areas, not that dissimilar to what Fibertech had, to continue to ramp that business. And the other thing I talked about with Light Tower, that was utility owned and underinvested. Well, this was BTOP funded. So they got the money up front to build the network, but what they didn't have was the money to continue to invest in growing the customer base. And so by investing $50 million to be able to do that, we feel like there's a tremendous opportunity to go after longer payback deals that they never would have been able to do on their own.
Sounds good. So Matt, back on the deal side of things, I mean, as investor interest has grown in the space, I guess what is there to be done sort of today from your perspective? What are you seeing out there with regard to the environment, investor sentiment, interest, et cetera? How is it evolving?
Yeah, I think it's a fair question. I think there has been quite a bit of involvement or evolving over the last few years. And as people look at the landscape going forward, as we talked about, a lot of consolidation has happened, and that's been an easy way to understand that thesis. But it's kind of the aspect of, well, what's next, particularly on the private side. And a lot of what we're seeing is what we're talking about here, backhaul from cell sites, as well as a lot of the underlying infrastructure needed for small cell DAS. We're seeing a lot of that play. All the investors here are certainly very familiar with that and those trajectories and trends. I think we're also seeing people taking what they've built from a network standpoint that may be built around backhaul, and they'd have a great network thereafter, but then it's transitioning that network to, all right, how can we capture growth and upside from buildings that we're passing, other commercial opportunities and enterprise opportunities. And so we're seeing a lot of the businesses moving in that regard and factoring in growth around that. So I think the industry has transitioned. There's still a lot of growth, as we've talked about. And so it's trying to find some of those various ways to play it, whether it's, again, backhaul, E-rate, we're seeing a lot of opportunities around that. BTOP, as Brian just did a deal. There's still a lot of opportunities within the fiber standpoint.
So, but I think for tier 1 and tier 2 markets, I was talking about that Ohio deal.
Yeah.
We didn't do that based on the backhaul opportunity because so many of these towers at this point either are already connected or the RFPs have gone out and they're going to get connected over the next year. So in tier 1 and tier 2 markets, in particular, the opportunity to connect fiber to macro towers is largely played out.
So with that, keeping that in mind and thinking about what we've heard on the BTOP front, Chris, you guys did a deal for Cantera which had historically a pretty heavy knitting to the microwave space, but also had underlying fiber assets as well. Maybe you can talk around sort of the vision and the long-term opportunity with that deal on your end and how you see that business playing out as far as its role in the space.
Sure. I mean, just to put in perspective, Cantera is probably about 40% fiber today, so about 60% microwave. And you're right, historically, it originally started as a microwave backhaul business. And so it started doing microwave backhaul, and then actually started as rural education, and then moved into microwave backhaul. But it's always been focused on rural as it relates to the microwave segment. So, you've had different people, just the last panel, Ron, talking about, microwave at length, and I know Tower Cloud does some of it. Microwave is actually is going to be around for an awful long time, but it's got to be in the right areas. And, when you're talking about 10-mile hops, which is kind of where Cantera focused, I don't think fiber is going to sort of lay 25 miles out in the middle of nowhere, through deserts and uphill and up mountains and such like that. So, I think from our standpoint, how do we see Cantera? It's no different than actually what we see in kind of any of our other broadband businesses. It's a broadband business. And collectively, they provide fiber or microwave and or hybrid solutions. And so we actually just look at it as it's just another quiver that they can shoot. But the fiber business is growing 25% this year. We're based on the wins we've got, we're going to expect to grow at 25% next year. So, I mean, that business is going to continue transitioning largely to, more fiber-based network. And so it's fundamentally, as long as you're providing the right solutions in the right locations, at Rich's point, fiber is the winner. Absolutely, fiber is the winner in kind of metro, suburban, near metro markets. It's going to be fiber, and more fiber. In the middle of nowhere, broadband's still going to get out there, and that's going to be largely microwave-based. So, I mean, for us, that's the way Cantera is going to continue to play. We're just going to focus the fiber in concentrated geographies to take advantage of what you're hearing, which is, the best fiber networks don't sell to one group because it's really hard to sell to multiple groups. So, a lot of businesses that we looked at on the fiber side, they kind of only sell to carriers because you don't really need that many salespeople to sell to, a dozen or so carriers out there. It's hard to sell to enterprises and to schools and to hospitals and things like that. That's a lot harder, and I think you're starting to see the fiber guys who remain, certainly the bigger guys, be much more diversified, and that's where this is going to go, and that's what Cantera is going to do. The one thing we thought Cantera had was they already had an enterprise sales team that was selling fiber, and they already had a carrier team that was selling microwave, so they had both elements of the story. So, we were kind of just excited to provide them capital to go chase the bigger deals, to go do both.
Great. So the other area we're hearing a lot of buzz about, but not a lot of real scaled activity, is the CRAN, remote radiohead, ODAS, small cell, buzzword, genre group, sort of non-macro site densification is what we're terming it on our end. If you look at the list of other panels outside, I think every single one of them probably had one of those terms in the title. Outside of Crown and Extenet, how do you play that opportunity? I guess from the investor side of things, what have you guys thought about? On the deal side of things, are there, is it these startup entities that are there startup entities out there looking for funding? How have you guys, so I guess we'll start with the investor or with the bankers and see, are you seeing activity of new entrants in that space looking for financing, and how is it resonating?
So we've seen, this buzzword, I guess CRAN is probably the latest one. It's been probably, 4 or 5 years that the DAS, concept or buzzword has been really, really building, kind of somewhere in there with the HetNet buzzword that was also out there. I think, we've met with a number of companies over the years, and it's always, from our perspective, been too early for them, because I think they actually really have the right idea, right? That the networks are going to continue to be densified. And I think most interesting and probably a very good data point is what you saw in auction 97, which is the most recent FCC auction, where Verizon, what they say, is effectively tapped out of the auction at, they spent $11 billion, but nonetheless, they didn't get a nationwide footprint of auction 97 licenses, and AT&T spent $19 billion. And Verizon tapped out for the purpose of that they want to further densify their network, and they just said, hey, instead of spending it on spectrum dollars, we're going to spend it on network dollars and do that through densification, for example, by adding 400 small cells in Boston, and they're also doing that in San Francisco, and you're going to continue to see them do that throughout the country. Sprint is going to add some number of small cells as well. So I think we're finally actually seeing now, we're feeling more comfortable that there is an investable opportunity, and we're feeling more comfortable about working with companies who are interested in getting capital. What we've also found, though, is that, up until this point, those companies who have been seeking capital have almost been there, but haven't quite been there. They've had good conversations with the carriers, they've had good conversations with building owners, but those conversations haven't necessarily led to firm contracts, and I don't think investors are going to put some money down unless they have some firm contracts. So I think we're starting to get to the point where some of those contracts will start to come up. It'll also be interesting to see how the carriers behave in this manner. They're very interested in continuing to control as much of their network as they possibly can. And dissimilar from a tower where they don't feel like, renting steel is losing control of their network, going into any building or anything and letting someone else control more of their network is a bigger decision for them. And so it's just taken a little while longer. Ultimately, I think this is where it's going, network densification. ultimately, I do think there's going to be some independent operators that start to come up, but we haven't necessarily seen a ton of these, unlike in the tower space where you feel like you get introduced to an investable, someone that needs money and has signed contracts like every day. It's just taken a longer time, at least from what we've seen on the IDAS, RAN, ODAS, HETNet, blah, 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 blah sector.
Yeah, just to add to that, I would agree with what Jason said, and another one I'd probably add to the list would be mobility. That's done a pretty good job scaling that historically. But it definitely has been a lot of activity from the larger 3 players that we just talked about, and then a lot of smaller ones that seem to be close, have traction, but haven't necessarily gotten to scale. And it's been different for these operators versus, say, on the macro tower side, where you can kind of build scale organically doing BTS and other things. These are complicated networks that are being built. And so it's a little bit more difficult to get that scale and to get that kind of level of confidence with the carriers. With that being said, I would say, other data points that we're seeing, particularly in large markets like New York, we're seeing multiple DAS sites and small cell networks being built right now, and then large networks being built expected in 2016. So it's coming, it's happening. It's maybe taking a little bit more time, but so far it's been some of the larger carriers.
So, Brian or Chris, I mean, how do you guys think about the opportunity? How do you play it?
I think,
or can you?
So there's kind of like ODAS and small cell, and the lines, I think, between, so just looking at it from an outdoor perspective, are really starting to blur a little bit. And that's just because so much of the intelligence, because of the other acronym CRAN, is starting to become, centralized. And, the carriers are increasingly want a hub to manage, with, NFV and basically these virtualized networks. They want to be able to manage their networks remotely from one place. So, whether it's an ODAS or a small cell that, has the baseband in a centralized point, all of that points to the importance of fiber. And, and so for a new entrant to say, I want to go be a significant player in a metro area in small cell or DAS, it's really difficult to make the economics work, because the existing fiber infrastructure, the existing fiber providers have a tremendous advantage in being able to hit all those sites and deploy the fiber to those locations. So, Chris can get into Fibertech, who I know has been very active. Zayo is getting increasingly active in small cells. So, I think all of the existing fiber providers are extremely well positioned to go after that space better than any kind of a new entrant. The opportunity that we see that might be more ripe for new entrants is kind of in the indoor space, I think, because when you look at, you probably have a couple 100,000 buildings out there, residential and commercial right now in the U.S. that I would say single-digit thousands have any kind of a small cell or DAS infrastructure. And you've probably been to a lot of these panels. You hear a lot about, well, what's 5G going to be? Maybe you'll have some lower band, 600, 8 megahertz spectrum to anchor it. But there's going to be a lot of high band spectrum that's deployed there. And the ability to get that stuff to propagate indoors is going to be really challenging. So, if you look at, 5G is 2020, but even, LTE Advanced, the importance of getting indoors is huge. And so I think, the carrier's ability to get in hundreds of thousands of buildings on their own is kind of pretty much impossible. So they're going to need third parties to help manage that process for them. So we do view that as an opportunity going forward.
Yeah, I agree with Brian. I think, I'll be a little more strident about it just because it's entertaining to do so. I think you'd be crazy to try to fund someone who says, I want to sit and build a small cell network. Largely for 2 reasons. One, largely for the first reason for what Brian was describing, which is these solutions are largely fiber-based today. And increasingly the carriers who are leading the forefront on small cell are wanting dark fiber solutions. So you really got to have a robust network where it really counts, which is largely in metro areas where they've got, capacity issues. So, going to sit there and speculatively build that just strikes me as generally crazy. The second reason for it is I just don't think there's enough it's just not a smart enough use of business to say, once again, I'm going to focus something on a very long payback, one segment of the market. If you own a dense network like what they've just bought in a metro area, the key there is trying to resell that network in a lot of different areas, right? And I just don't think, by focusing on one particular area that's really going to be successful, or one segment that's going to be successful, because we've had a significant amount of consolidation and investment in the past 10 years building out broadband, so it's going to be a lot harder. Will there be companies that are somewhat successful? Absolutely, but I think they're going to be the far and away exception versus where you were kind of 10 plus years ago. The other element to it is this idea that kind of Crown and Extenet are the leader in small cell. I mean, they're just not. It's a wonderful marketing tool that they've sort of displayed out there, but I mean, a lot of what they're doing are nodes that are really DAS-based and aren't really small cell-based, and they're coming at it with a very different approach. And part of the reason you're starting to see, and this leads to another one of probably the questions you want to ask is, are the tower guys, going to start acquiring more and more fiber, is because, I had dinner with the CTO of one of the carriers last night, and he just reiterated the fact that, for small cell, we can talk about how wonderfully crafted the equipment solution is and what you can do with it, but he's like 85 to 90% of the cost is ultimately going to be the deployment cost of the bandwidth, of the broadband solution. And all that begs is to taking advantage of the infrastructure that's already there, because they want it really, really cheap. So, as it relates to a solution for, Crown Castle and Extenet, they're approaching at it a very different perspective. They're coming at it from an RF perspective. They're building up their fiber. It's been very DAS-centric. I will tell you, the fiber guys are in a great position to compete with them. And it's not coincidence that, in the past 12 months, Crown has done 4 fiber deals. Yeah. It's not a coincidence. And the thing that Crown struggles with is they're not a fiber company. Yeah. And running a network is a lot harder than sort of being a land management company, which is what you are as a tower business. I respect the hell out of them, but I mean, it's this idea that they're leading the wave here. The wave is coming. I think it's robust, but we're really on the crest of it. And a lot of what you've heard so far, I think, is kind of myth, because I don't think the carriers have it really figured out yet. Rich, you see this too.
Yeah.
So I'm very, very bullish on outdoor small cell long term. Those are careful words. Very, very bullish on outdoor small cell long term. But you better be really careful from an investment standpoint and really patient. I agree with all the comments that have been made here. We see some folks that are trying to learn that business, and it's it's not a real estate business. It just isn't. It's a very different business. It really requires expertise in fiber. It requires expertise in building fiber and in operating networks, and those are very different skill sets. But long term, it's coming. It's going to start in the larger cities, and it's going to move fairly aggressively to more rural networks. You need to densify. You need to get capacity. You need to move your network closer to customers. All those things are going to happen, and question we can argue about when and how long. They're absolutely going to happen, but I'm quite confident that there are going to be some folks that get in early that learn from it. And depends on how much that learning costs, we'll see.
So I was going to go the opposite way of what Chris was saying, and ask when the fiber companies are going to get into the tower space, and if there's room for somebody like Zayo to build 20 towers. It won't be obviously a scaled play, but I guess in the investor experience, did you guys think about that? I mean, the same things to be said for data centers and some of those entities too.
Well, I don't know that fiber guys are going to build towers, but Cantera, as a microwave company, has infrastructure. They have towers. So, one of the other reasons we were attracted to them is they have 500 towers. Now, while that sounds a little amazing and whatnot, we don't have any tenants besides ourselves on them. So I don't want to give people this illusion like, hey, we just bought a massive tower company on the cheap. But the point is for microwave, it's definitely something we're exploiting. We have a JV with Mark Ganzi's company. He's selling it. There's probably some value there. And we've got an arrangement with them that, we can build towers together, we sell together and so forth. So, as we're trying to develop hybrid solutions, so when Mark's not out buying tower portfolios, which is actually 99% of the time I've learned, when they actually build something, one of the ways we're trying to sell together is selling a full turnkey solution, which is broadband, whether it's fiber or microwave or hybrid based with a tower solution. So I think we've seen those opportunities, but in terms of a fiber guy building a tower, I think it's just very, very different. I mean, fiber guys to play some of the areas we're talking about, I think would rather exploit their network. They've got other ways to put their capital to work. Tower paybacks themselves, because we've looked at it, are lower than fiber. They're longer term. It's really expensive to put up a tower. It's it's $250,000 plus a tower. So I just think they're different. In that regard, we've never really considered that. Where we have gotten pulled, and where you've seen companies like Brian's and others, is you get pulled into a data center market or some form of disaster recovery. I mean, those are things we certainly considered and came up time and time again, in our fiber investments, and certainly you see Zayo who's successfully doing that. I think, as I've had the conversations with Brian and Zayo and the team there, doing it strategically, thoughtfully on a pinpoint basis versus just buying every data center out there is what they're doing, and I think it makes sense like that. But I think you're going to see more infrastructure come together, but I don't know that towers will be the one that's a part of it.
No, for all the reasons Chris just said, I don't see fiber companies building macro towers, and part of it is they'll never get the credit in the multiple as well, from what tower companies trade at versus what they trade at. But there is a lot of other kind of cross vertical activity going on, and particularly around interconnect and co-location, just because there's cross-selling opportunities for your customers as well.
I'm going to take the other side of this one. In that I really do believe that somebody has to. It's late. You either watch the football game or take the other side. So I think it's a great opportunity for a fiber company to build towers, not buy towers, build towers, because your customer wants you to help solve some problems for them. I think a lot of the carriers are concerned about the consolidation of ownership of towers, although they're helping consolidate it by selling them more of their towers. And I think they'd welcome a play from a fiber company to help solve that problem. I also think that those multiples may get closer and closer. I mean, I believe that the multiples on fiber companies are still a little low compared to tower companies, and there's some similarities between, you can argue different aspects of it, but, I think that there are some similarities there. And I think if you really look at your business as a wireless infrastructure play, I think it's a natural to be going to your customers and saying, yeah, I can build you that tower, and I can connect it with fiber to my network, and then I can lease it up by getting others because I've got a tower that's connected by fiber. So I think it's a good opportunity.
I agree with everything Rich said, because we're doing it at Cantera. The way we're attempting to do it is, the tower piece is it's a different buyer than the backhaul piece today. Mm-hmm. And, it's a hard leap to say to a fiber company, hey, go just start, because you're selling to a carrier anyway, go start selling, hey, we can build towers. We've partnered with guys who can do that, have a relationship of history, of a lot of credibility, to do exactly what we're attempting to do, exactly what Rich is saying. I believe that opportunity is there. I just don't want to go do it myself, right? That's partly why we've partnered with Digital Bridge to go do that. I'm not saying it's not possible, but from our standpoint, because we have a finite period of time in which we want to have some success in this, to speed that up, we really wanted to partner with someone who has a lot of those relationships, has a lot of credibility in building and managing towers.
So do you think Digital Bridge will end up in the fiber business? It looks like they're going in that direction. He's not here, but we can speak for him if he's not here.
Yeah.
I mean, look, I know he's looked at assets. There's no doubt about it. So, I mean, I give Mark and his team a lot of credit. They're really smart guys. They just did the ATLANTIC deal. I mean, clearly, what you've been articulating, you hear Mark say quite a bit, which is at the end of the day, it's wireless infrastructure and I want to provide people as broad a set of solutions as I possibly can. So, from that regard, is it that big of a leap for him to go and acquire a broadband company or a fiber company? No, I don't think it is. I think, it's something that's, he's cognizant of, but is it, he doesn't tell you where that sits on his priority list, but I think it's there.
Sounds good. And with that, we'll do a question check. Does anybody have any questions for this esteemed group we got up here? Okay. So we'll close with, if anybody, we'll give you each a 10-word prediction for the next year of what we'll see in the fiber infrastructure space. You want to start with, can I put you on the spot, Jason?
Great, thank you.
What's going to be the most interesting thing?
The most, I don't know, 10 words on the most interesting thing over the next year. I don't know, I think all the trends are, unless there's some large macro event, the trends are all positive, and we're going to continue to see all the things we've been seeing, M&A and so forth. What I think might be the most interesting thing is the topics we just discussed. Further consolidation amongst an area that should simply just be called telecom infrastructure or wireless infrastructure. And ultimately, tower companies are kicking off a ton of cash, and they can either try to buy some more towers in the U.S. or they can try to further take advantage of some of the obvious industry trends that are going on, which are densification of networks and are being solved with fiber and small cell and DAS systems in cities. So look for that.
I think as we look at the next year, 2 years, 3 years, I think we're going to see further diversification of fiber businesses expanding into other areas. Not all of them, but some of them looking at more opportunities to add arrows to their quiver for targeting enterprise customers as well, whether it's offering other managed services, whether it's what Zayo has done with Lattice. I think we're going to see more of that happening and kind of the blending of the different telecom infrastructure areas.
I just think it's going to be really interesting and entertaining to watch and see how successful or unsuccessful Sprint is and kind of trying to reinvent this
there we go.
In the wireless infrastructure where there's 70,000 small cell build out.
In the next year, diversification, consolidation, and an Eagles Super Bowl.
Well, there you go.
I think that was 10 words. That was good.
Yeah.
I mean, it's hard to top that. So.
Yeah.
Sam Bradford?
Yeah, I'm not going to top that. So
Okay.
all I can say is go Cowboys.
Thank you all.
You're right, you didn't top that.
Thank you all.
Thanks.